The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. Any references to performance of securities are thought to be materially accurate and actual performance may differ. As always, please remember investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional.
Welcome back to another edition of the Daily Dots here on Wednesday, July 9th. Chase flying solo with you, probably for the last day this week. And I'm recording this about an hour before the market closes, so definitely earlier than usual. I got to turn on dad mode here soon, so I had to roll early. So I am going to go through the markets, but remember, this is a full hour before the close, so a lot can change by the time this is out. But the S&P is up about 0.5%. The Q is up about 0.6, 0.7. Small caps up 0.8. Equal weight up 0.2. This is definitely a Mag 7 day with Mag 7 up 1.1. All world ex-US up 0.4. The dollar is essentially flat. Bitcoin's up a tiny bit. Oil flat. Nat gas down a good bit. And that's actually had a pretty rough run here lately. And when it's deserved, weather has not really cooperated, and then almost every week the storage report is a little worse than expected. So I think we've probably come into a bit of a spot that's decent place to take a stab at buying some. But we'll see if weather keeps rolling over cooler, that will hurt. Speaking of my beloved soybeans, that trade has gone horribly. Thankfully not in the Bulwark portfolio because there's no way to do it without paying a K1. But on the personal side, that hit. And you basically needed Midwest weather to be pretty hot for like the next, call it, few weeks. And this latest weather model refresh has it cooling off pretty good. So that was a good setup, but one that failed. And that's how these things go oftentimes for me in ag trades. But gold pretty flat, silver down about 0.5%. Same for platinum. Palladium up 1.8. I think there was some news of a mine closure in Canada that probably is helping palladium a little bit. Copper, after yesterday's monster, like 9% up move, down about 2-3%. Gold miners, despite gold being pretty flat, up about 1.5. So getting some of that big move from yesterday unwound. Similar for energy. Energy, as I talked about yesterday, you had the oil up a little bit, but oil stocks up a bunch, and those are kind of giving some of that back. I would say the biggest news so far from today is yields. And this is catching me wrong-footed and confusing me. The 2 years down about 3-4 basis points, but out on the long end, the 10 years down 6 basis points. Now, all we've done is go back and retest a bit of a breakout in the 200-day moving average, so no damage has been done, but I'm still a little surprised by that. And I think it was already going on before the Fed minutes came out, but I think that's a big part of it too, because it accelerated after, and I don't know, maybe a handful of people got wind of what was in those before they were supposed to, but because there's not really much data today. But sure enough, yields on the 10-year back to where they were, I don't know, like 2-3 days ago, but it looked like you were breaking higher. Now it looks like maybe not. And I'll talk more about the Fed minutes as well. You got Apple flat, Google, Microsoft up about 1%, Tesla down a tiny bit. And then you have NVIDIA up almost 2%, Google up a little over 1%, as I mentioned. Taiwan Semiconductor, obviously not Mag 7, but another important microchip name, up about 2.3%, so having a very solid day there. As far as the VIX goes, I always quote front month VIX futures, but today I'll actually do the spot VIX because we just rolled the contract on the VIX futures, and it makes it look like it's up more than it is. But VIX proper, the one everyone else looks at, you're down about 6%. You're down to a 15 handle now, 15.8. Whereas front month VIX futures just rolled forward, and they're at 19.3. Decent chance that is carrying that 18 handle very, very quickly. I would assume. As far as data goes today, we did have a decent amount. Well, not really, but we had mortgage applications, which have been just brutal for the last few years, and that we had yields. If you think about it, yields got down to about 4.2 last week, which was the lowest since April. And obviously we went down for a big reason for April. So a decent stimulative boost there from having the 10-year down that much. And sure enough, that did boost mortgage applications in a big way. Notably, though, a lot of the applications are for refis, and the lion's share of these are not fixed rate. They are now, you have a significant growth rate differential year over year for fixed rate and adjustable rate. So adjustable rate mortgages are growing 69% year over year, and fixed rate is only growing 34% year over year. So very interesting that adjustable rate's starting to do what it does. And I did an interview yesterday with Palisades, which I'm not sure if it's out yet, but when it is, I'll be sharing that out. And one of the things I talked about in that interview was, this strategy of selling most of the debt at the short end, avoiding selling too much duration, call it 10 years and up, and focusing mostly on 2 years and under for funding the government. Like the big problem with that is if you have a future inflation shock, then the amount of money you just tied to that is so extreme that it's way more detrimental to you to have that inflation shock than if you have a really long maturity for your average debt. And this is kind of similar when it comes to adjustable rate mortgages. Like they're awesome as long as rates stay reasonably low. But what you don't want to see, and this did feed into some of the problems in 08, is what you don't want is most people doing adjustable rates and then having a rate shock, and then everyone that rolls their mortgage over rolls it into something they just cannot afford. That becomes a very significant risk, big macro risk, a financial stability risk. And obviously, like the absolute levels for this aren't big enough to matter yet, but it's an emerging trend that I find a little bit disconcerting. I mean, obviously it makes sense. If you made me take a mortgage out today and I was stretching myself on home price, like I would have to do an adjustable rate too, and just hope that it worked out. But hope's a terrible strategy, I think, as we all know. So something to think about moving forward. Adjustable rates. If we end up with too much of that in our mortgage portfolio as a country, and then we have an inflation problem, which I would call likely, that could be pretty risky.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. Any references to performance of securities are thought to be materially accurate, and actual performance may differ.
One other thing I'll talk about the Fed minutes first, and then I'll talk about one other thing that I found interesting. Fed minutes, I would say, showed up more dovish than maybe some people expected. You're turning into a pretty big split on the committee. And I talked yesterday about how, just because, Trump wants rates down and maybe installs a lackey that'll do whatever he wants, there's 11 other votes. So good luck getting, enough of them. But right now, like, I think if he had Waller in place right now, or Hassett in place right now, or whoever, and let's say this person was pliable and just they gave a yes sir to whatever he said, I think you can definitely get the committee to go for some cuts right now, because the FOMC minutes showed a split, and the split goes right down where it should, and that is some people are worried that tariffs are going to be pretty inflationary. Some people don't think they will be, or think it's worth looking through them because they're kind of a one-off. I think that's a good debate. I'm not 100% convinced on either side. I favor it's going to cost some inflation, and we should respect that and not be cutting. That's my view, but I don't think we should, be throwing too much shade at the people that are like, I don't really think it's going to be a big inflation problem. That may prove to be, incredibly wrong and naive, but the reality is we've never really done this. The Fed's never been in this position. Have we had big tariffs in the past? Yes, but the Fed wasn't structured nearly the same. The economy wasn't structured nearly the same. Like, you just can't really make that comparison. So this is uncharted territory. It makes sense to kind of take one step at a time and feel your way through this, which is what they're doing now, which I appreciate. Not making big moves while trying to feel your way through. We'll see how it plays out, but it's a notable split. And I'm of the opinion we're going to start getting some warm inflation prints that will take that, call it roughly half of the committee that's saying like, I don't know, like, I don't think this is going to be a problem. Like, let's just go ahead and cut because inflation's low enough. We get, call it 2 out of 3 prints hotter than expected. Then all of a sudden that group starts to lose their voice and change their mind probably. That's my base case, but that doesn't mean I'm right. Maybe the people that are like, yeah, it's not going to do anything, maybe they can end up being proven right. And the last thing I want to talk about is something I'm a zealot about. And that I think the only 2 things I can think of I'm pretty much zealot about is, one, nuclear energy. Like that one goes past, me being an indifferent analyst. Like that makes so much sense to me that I get caught up emotionally in it, which I usually don't for anything. The other thing is Perplexity, the AI tool. Since the first time I've used it, I've basically been a zealot for that. I think it's incredibly useful, a very, very good product. It's not publicly traded, so this is obviously not at all investment advice. And it doesn't look like they'll be public anytime soon. They may end up selling to someone like an Apple or a Microsoft or something like that eventually. Who knows? But and maybe they do stay their own company long term. But we don't know. All I know is the product is impressive, and I signed up to their highest tier in order to get early access to their new browser. So think, Microsoft Edge, Google Chrome. They have their own called Comet, and I just started playing with it today. And just from a gee whiz, thing of interest, I wanted to kind of share what it can do with folks out there. And obviously, like, I have early access, which means this thing's brand new. Like, so it's going to have a lot of improvements, in the coming year or two to what it already is. But it's pretty impressive. I going to dinner with a friend tomorrow and was able to just ask it to go, find a good specific kind of restaurant and book us a table at a certain time. And it just went and did that. It even made me an account for for the place it went through to get the reservation. You can basically say like, hey, especially if you have like your own team internally or whatever, you can just be like, hey, like schedule a meeting tomorrow for any time that, me and Joe are both free, and it'll go do that. It'll send the calendar invite. You don't have to do it. Like it will literally send that email out. It creates the calendar invite. If you want to make it a Zoom or whatever, it'll do it. You can just say like, hey, I'm going to be in London on, from these dates. Can you please, just create a custom walking tour of, 5 different important historical sites. And I want to keep the walk, under 4 miles. And here's where my hotel is. And it'll just like create you an itinerary. You can do that for travel. I can literally like go and take care of travel arrangements for you. I was impressed by how polished it was already. I went to some websites and wanted to toggle between like dark mode and light mode on there, and just to see how that worked. So you just say, hey, can you like turn dark mode on this website? And it will just go clicking around and go do it for you. So you can tell it to do something like that and then go do something else for a second, come back, and it's the way you want it. Same with, the calendar stuff. Instead of having to go do it yourself, you can do it. It'll sort of show you on a side pane what it's doing, like, all the steps it's taking, and you can stop it at any moment. If it's going to do something important, like spend your money or something like that, it makes sure you click yes after it shows you what everything is set up. So it's not just off, running wild, Rise of the Machine style, but it's pretty cool. I look forward to using it more, and kind of playing with it more. And it, even if you don't want all the fancy AI things in it, it's just a solid browser functions just like Chrome. And I'm a big Chrome person. You can import, all your passwords and your links and everything. Even all my extensions that I use, like I have a highlighting extension. I have an extension that reads out loud to me. Like all those things work seamlessly. Didn't even have to like reset that stuff up. So very impressive. So I went from already being impressed and a zealot for Perplexity to just taking it to another level. So if you've never played with Perplexity, I would suggest it. And if you're a knowledge worker or an incredibly busy person where you could use some of these tools, taking the highest level of Perplexity it's expensive, very expensive. But if you're like an executive or something, I think the time savings makes it make sense. For me, just curiosity killed the cat, so I was willing to pay the whatever it is, like $200 a month to be one of the early people on the new browser. But if you've never played with the just absolute regular Perplexity, I'm sure everyone listening has at least messed with ChatGPT. Very, very similar, just in my opinion, slightly better interface and wrapper around it. But that's all I had for today. We will be back with you tomorrow, probably Zach only. Not 100% sure. We'll see how it all shakes out. But that's all for me today. And as I let you go here, 16 minutes in, not much has changed in the markets. So you're still up about 0.5% on the indexes. All right, that's it for me. See you all probably Monday for me. But have a good rest of your week and weekend if I don't see you again. And don't forget to download and subscribe, knowyourriskpodcast.com. Watch us on YouTube and check us out on all the other socials where you can find us, especially InstaFace. All right, cheers.
Investment advice cannot be given without a client service agreement. Zach Abraham is an investment advisor representative of Trek Financial, an SEC-registered investment advisor. Bulwark Capital Management is a marketing name only and does not carry a separate registration.